Hello, this is the Tradesight Stocks and Futures Market Preview for the rest of the week, Thursday the 18th of June and Friday the 19th of June 2015. Hope you're having a good trading week. Here's a look at the ES front month futures contract. We just bounced off of that 2062.50 level between Tuesday and Wednesday, back up to the 10-period moving average, which is obviously not taking us anywhere new. We're still in that range that we've been in since Thanksgiving. Everybody keeps asking, when's it going to end? There's no way to know. That's why it's called a market. It doesn't tell you exactly anything. You just have to trade it. But certainly it's unexciting. We did have the Fed announcement today, and I'll show you what that did intraday. But as for final results, the S&P, here's the S&P cash index, gained 4. NDX was up 13. Stock closed dead flat, up 0.12 literally. Biotech index was up almost 23 points. That's approaching 1-month highs there. Google up $1.73. That's nothing. Apple down 30 cents. Also nothing. We had the VIX closed down. VIX closed down 31 cents at 14.50. Jumbling my words here today. Crude oil back under $60 by a few cents. Playing with that level a lot lately. Here's a look at gold, up $4.60. The trend closed low at 0.72. That brings the moving average back down a bit. But just 3 and 4 days ago, we had those real high trend numbers, so that's going to keep that average up until a good 8 days out, basically. And NASDAQ volume closed at 1. Well, it was really 1.55, about 1.6 in there. And that is a poor number once again. I mean, it was all right, but we had the Fed meeting. We knew things were going to be a little slow. And so the good news is Fed meeting's behind us. The good news is that we still should have, given the fact that this is triple expiration, so it's options, commodities, and futures all expiring here in June. We've dealt with the contract roll over the last week. Now we have to deal with the actual expiration. There is usually, especially when all three are expiring, a options unraveling move where people kind of roll out of their positions. That usually happens on the Wednesday or Thursday of the week. Unless it happened after the Fed announcement today, which would be a little unusual, it doesn't really look like it's happened yet. I'll show you the possibilities. So, usually when you get an options unraveling move, it starts right after the first hour. And so here's a look at the last couple days on the ES and 5-minute candles. And the first 2 hours were very flat, so it's hard to say that we got an options unraveling move. We did head lower over lunch, came back up a little bit, and then you can see when the Fed announcement hit, spiked all the way back to the highs of the day, then pulled back, and then turned and tried to go one more time, ended up failing, and ended up closing back to basically flat for the day and right on the VWAP, where we keep closing a lot. Anyways, so that was kind of uneventful net. If the options unraveling move managed to occur in there after that announcement in the wildness there, that would be disappointing, but certainly the volume wasn't heavy enough to suggest that that's what's happened yet. So hopefully we still get that move. It would be Thursday rather than Friday. Friday is just going to be a day of the actual expiration where they wind out the positions. They've usually closed everything in advance. They're just matching off the option side to the stock side. So you get a lot of volume. It means nothing in the market because they've already got the long and short positions matched off, and they just wrap them together, and that prints some volume but doesn't go anywhere. So that'll be Friday for triple expiration. You'll probably get a big volume number, and it'll be completely meaningless. The real question is Thursday and whether or not we can get a good move at some point in here now that we're free of the data. And so let's look. What do we actually have this week? Or on Friday, we have, on Thursday, we have the weekly initial and continuing jobless claims numbers. We've got the CPI before the bell, another big one. Current account balance an hour before the bell. And then 30 minutes into the market, the Philly Fed leading indicators numbers both come out. Those can be important, and natty gas now in. So there's enough here with all this news, plus just having digested the Fed, plus triple options unraveling ahead of expiration to hope for some sort of a move here finally in the market. Whether or not we get it obviously remains to be seen, and we will be trading accordingly. But certainly there remains the potential for this to be the better trading day of the week, which is what we said coming in. Now, we will not be doing a market preview for Friday. We don't typically do them for Fridays. Most of the week is done at that point. We certainly won't be doing it for triple expiration Friday, but just so you know in advance, there is no economic data due Friday at all, so it's just the expiration process itself. Everybody will be taken off. We'll have a bigger, broader comment on the market in the weekend preview for the next week, but just to sort of get you prepared for what's coming. June has obviously been not very exciting, as has May. I would say two of the duller months that we've seen in stock trading in a long time. What's coming up? This next week is still a full trading week. We do not have the Fed. We do not have options expiration. We do not have the contract roll. We have a straightforward trading week. We do not yet have earnings. So that week after this one still has the possibility of showing us something, obviously, to do in the markets. Hopefully, there's some economic data coming out. So we'll see. We'll go through what's coming out when we do the weekend preview. The week after is the beginning. It's the end of the first half of the year. The Tuesday, the 30th, is the last day of the month, of the quarter, and of the first half. That probably means Monday and Tuesday will be a little light, just because they've already got the stocks pegged to where they want them to print for statements for midway through the year. But what does often happen is, as soon as July starts and those prices are no longer something they're holding the market to, we've seen many years where July 1st, right out of the gate, boom, we take off one way or the other. So we'll see what happens. That could be the starting point of some action. But be aware, in addition to the fact that that week, Monday, Tuesday, and then Tuesday is the end of the month, end of the quarter, end of the half year. Wednesday is the first, Thursday is the second, Friday the markets are closed to observe the 4th of July holiday here in the U.S. The 4th of July is actually on a Saturday, so people will be heading out early on Thursday for the long weekend, with Friday having the markets closed and everything. So it's going to be interesting to see whether they really get things going on Wednesday the first day where they can, with only really a day and a half before everybody takes off. And after that, we're into July. I like to tell you that typically there's not necessarily anything wrong with July. If we go back, you can see, if we go to the front month ES chart here, and go back, you can see last July, started to move up initially. When I talk about we can take off early, the first 3 days were up, and then it wasn't overly exciting. If we go back a prior year and take a look at July, you can see that July was a big up month. Okay, so a lot of times July is exciting, and so we'll see. Obviously, August is the month that some people think is a little slow. I'll tell you that August, on average, and it's not here on the one year I'm showing you, which was 2013. Here's 2014, August. Look at that. August was up pretty solid. August, on average, even though volume tends to be light, and we're going to say right now, how can it be any lighter than what we're already seeing? But it tends to be light. It does tend to be a fairly easy month to trade on the long side more often than not. It is statistically, on average, over the last 100 years, the most positive month of the year, and a lot of that is because the big players go away, and there's not a lot of games being played on the short side of the market, and so it does have a chance to take off. September tends to be a little more negative, and then, of course, we often get bottoms in October, just like you can see on the chart I'm showing you. This was last year, where we rolled over in September. This is a textbook look at what August, September, and October can be, which is that August is up, September starts to roll over, October things feel like they're getting a little bit out of control. Market bottoms right in the middle of October, right around expiration, contract and options expiration, and then from there we bounce through the rest of the year, and that's exactly what we got last year. Okay, so a lot of good stuff that could still be ahead here, even though market's been certainly very slow lately. If you look at the prior year, July was good to the upside, August was down. It was kind of a weird inverted thing. September started to head up, but then dropped in time to get into October a little bit, bottomed out just ahead of the middle of the month, and then ran into the back end of the year. I'll go back one more to show you how this tends to work. So here's the prior year, 2012. July was pretty volatile and to the upside. You'll notice the big day to start July here on the chart. Remember I said as soon as they print those statements for the first half of the year, the end of June, suddenly the market sometimes rocks, and that's what you see here. There was some good volatility back then, and then August obviously can be the most positive month. It really was up, and then September we actually were heading higher. Did not really roll over. We didn't get that bottom in October like we often do. We got it in November instead. So it was a little bit of a different year. It was also an election year, 2012. All right, I'll probably go back through more of these in the coming weeks to kind of give you a preview of what's left for the year. But obviously, the first things first, we got to get out of this range that sucks. And I don't think it's going to happen here on the rest of this week. So hopefully Thursday gives us some opportunities. We'll be in the lab trying to help you out. Charts, as usual, brought to you by eSignal. If you have not taken a trial of our services, you can do so. We can help you out for a couple weeks. And we will see you in the lab. If you do find these videos useful, please like them on YouTube. It does help us out. Have a great trading rest of the week and a good weekend.